We've been asked a lot in recent days whether our market analysis still makes sense in these news-driven times and whether price still reacts to our level of interest levels. In this video, I want to show you using a few charts from the past several days that trading is still based on supply and demand, even in times like these. We can use our levels in the same way we do during calmer periods with a few simple adjustments, of course. Prices move on the basis of supply and demand, and that supply and demand can naturally shift even more dynamically and rapidly when news is hitting the market at a high frequency. This is especially relevant in times of war when we are confronted almost daily with new and sometimes unfamiliar situations. In general, as order flow traders, we tend to be rather news averse. That means we try to avoid being involved in trades during major times of news or major news events in general whenever possible, because they can cause high volatility and expose our trades to a certain degree of randomness. The usual news events, such as PMI data, non-farm payrolls, or Fed meetings, are scheduled in advance and they can be deliberately avoided. But when Trump posts a reckless tweet or a missile lands somewhere unexpectedly, these are, of course, unpredictable events that can change market dynamics from one second to the next. News like this can also occur in everyday market conditions, but for understandable reasons, their frequency is currently much higher. That is why we do not necessarily need to change our overall approach to the market or the way we think about it, but rather the way we manage risk and position sizing. Anyone who gambles excessively and uses too much leverage in times like these can get run over very quickly. Position sizes can and should be kept deliberately smaller and adjusted to the current market environment. It is also important to observe the market closely so that we can detect changes in its character as early as possible. At the moment, we are in a market phase that is volatile but still strongly range-bound. Large trades that we can build over the course of an entire day, as we would typically see on trend days, will be rare in times like these. That's why it makes much more sense to look for entries as close to our levels as possible and to think more in terms of moving from level to level rather than gradually scaling into a larger position. That is why in recent days it has proven effective to realize profits once the next significant level is reached. Good risk-reward ratios between 2 to 1 and even 5 to 1 are still possible, but the potential a trade appears to have at the moment of its entry is much harder to assess. That is why a level-to-level trading strategy makes much more sense right now. To illustrate this, let's simply take a look at a few charts from the ES futures markets over the last several days. To avoid cherry picking, we'll just focus on the most recent trading week, which was shaped by the war involving the US and Israel against the Iran. Let's have a look together at two examples of the previous few days. As you can see, this is the 6th March 2026, last Friday, and my chart, like always, is divided between the pre-session and the US cash session, pre-session being on the left side of the image and the regular trading hours, the cash session, beginning here 9:30 Eastern Standard Time on the right side. As you can surely see, the market opens in this green zone, which we call a Vanna bull zone. If you're interested in the different types of data that we use for our market analysis and the different level types that we draw into our chart, I would strongly recommend you check out our website, TradeNeon.com. You'll find several free educational tutorial videos that you can check out and where you can learn about all these different types of levels and their color codes that we use for our charts. On this particular day, the market opens here on the left side within the Vanna bull zone, breaks two levels, and then rotates between the start pool level and the upper border of the Vanna bull zone. The theory behind that is as soon as the price moves through a Vanna zone completely, we often see a reaction on the border of those Vanna zones, and usually we see the price passing through the complete zone to the other side again afterwards. Exactly that is what's happening here, but in the meantime, we see several reactions to our levels here, breakthrough, pullback, pullback, before the market finally breaks out of the Vanna bull zone shortly before market opening. What you can now see is that the market opens at this blue level here, which is the CME span interval. Whenever we see the market opening at or even beyond those span intervals, we usually see a strong move in the direction of this span interval, in this case to the downside. As soon as the market opens, this move actually does happen, but you can see the market finds a bottom here and later on within the session breaks up into the span interval zone again. And in the course of the session, we see this strong rotation between those two levels being a combined level of dark pool liquidity and dealer hedging level to the upside, and span interval liquidity and dealer hedging level to the downside. As soon as you realize this kind of rotational move is happening and the price finds a fair value in this zone, you can use the upside of this channel to find several entry possibilities for short trades, and you can use the lower border of this zone to find possible entries for long trades. Let's go through a second example and use yesterday's chart from the 10th of March, which is a Tuesday. And as you can see here again, the market shows several Vanna zones opening in that bear zone. Above, we have a bull zone and also below another bull zone. Again, the chart is divided between pre-session and cash session on the right side. As you can see, the market opens within this Vanna bear zone, rotates in the first trading hours, and then afterwards reaches the upper border of that Vanna bear zone, which is also accompanied by the yesterday's high. This would have been a level where in practice I would have definitely been searching for a short entry. However, after some minutes, the market makes this breakout above the yesterday high and in the first minutes stabilizes within the bull zone, making this beautiful pullback to the yesterday's high level. The breakout was not successful though, and after some minutes the market breaks again through this level back into the bear zone, and it shows us these two nice pullback situations here and here. Right at the market open, we see one of the nicest reactions to our levels of the whole day. However, I would not recommend using level of interest to trade during the first 5 minutes of the regular trading hours. I usually wait 15 to 20 minutes until I have enough information about what the market is planning for the day. In the meantime, I can collect valuable data, for instance, dealer hedging data from Volant and so on. And after the first 30 minutes of trading in the regular trading hours are done, I usually have enough information to form a good plan of what I want to see and what the market is showing me to plan my trades accordingly. At around 10 a.m. Eastern Standard Time, we see this particular upside move here. This is exactly what I was just talking about, those kind of irrational news-based movements that the market is showing us on a regular basis in these days. I strongly recommend to just watch the market while it's making these kind of movements. You can clearly see the market makers pulling out the liquidity out of the order book in these situations, and the market getting really fast in movements, volatile, because there's just no more stability in the market. Do yourself a favor, try not to trade those kind of movements. It's usually very difficult to plan your position sizes, to plan your stop management, your to plan your risk-reward ratios in advance. So in general, there's a lot of randomness in those kind of movements. So I would strongly recommend you just wait until the market finds stability again, until the liquidity comes back into the order book and the market starts to rotate within a certain zone again. So you can simply better plan your trades ahead. A good example for that would be the pullback here to the lower border of the Vanna bull zone and the yesterday's high. This was actually a situation that I know a lot of our students traded within the course of this day, and that was kind of one of the most beautiful trading situations we had on that particular trading day. Later on, the market showed us another breakout here above this double level. However, it could not stabilize beyond it, broke back through, and showed us another beautiful pullback reaction to that level. Here again, we see one of those news-based movements where we're better off just being the watchers, and afterwards we see some nice rotation between these two levels before the market breaks down again and closes very close to its original opening level. I hope you can see that even in these news-driven times that we're actually facing, the market still shows a lot of clear reactions to our zones, to our levels, which makes it easier for us to plan our trades ahead. The important thing is that before your trading session, you actually make some notes, make some thoughts of what you want to see during the session, on which levels you might want to see short trades like here, here, and where you would consider possible long entries like here, or here, or here, where it actually broke through. This makes it much easier to stay objective during the trading session, which is one of the biggest advantages that we can offer you with level of interest. If you're interested in the software, as I said, check our website TradeNeon.com. You'll find a lot of free information videos on how those levels are derived and what the different level types mean. If you want to see more content on how we use our levels in practice, I strongly recommend you subscribe to our YouTube channel here. And if you're interested, you can test level of interest now free for 7 days.